Well, hello, friends. Carl Miller coming to you from Lynchburg, Virginia, at the headquarters of Carl Miller Realty, located at 7700 Timberlake Road, with our Friday update. It's a rainy day out here this Friday, and I wanted to give you a quick couple of statistics of what's happening in our local Lynchburg market. As you know, we've been continuing to track the statistics, and as of this morning, we actually have more houses for sale than we've had in, goodness, probably since June. This morning, there are 397 single-family homes on the market, and that's Lynchburg, Campbell, Bedford, and Amherst counties. So take the city of Lynchburg, the three counties that touch it, single-family homes. We're up to 397. However, there's still a lot of activity happening. Right now, when I look at the pending sales, there's 450 currently under contract. And if we make the assumption those close out in the next 45 days or so, that means there's about 300 selling every month. And so again, we still have tight inventory with 300 sales per month and 397 on the market. Looking back the last 90 days, the homes that have actually closed, there's been 276 per month. So again, almost trending at that same pace. But we are seeing a little bit more homes for sale. Last week, as you know, we were down in 370s, and the week before that, we were in the 360s. So it's good news. I wanted to share with you, though, that it's still very competitive out here. And so if you're a buyer, especially if you're under 300,000, a lot of multiple offer situations, a lot of homes are selling very fast. It's still a racing market as opposed to what I would call a professionals market. But a couple of statistics, a couple of things I wanted to share with you. We have just this unprecedented time right now to take advantage of incredibly low interest rates. With a little bit of points bought down on a mortgage right now, you can actually get a mortgage in the mid 2% range on a 30-year fixed rate. Just never seen anything like this. A few of my clients had locked in at 2.75, 2.875. I was really excited, and these are 30-year fixed. We set a new record. One of my clients locked in at about 2.5% this week. Just unbelievable. Now you're going to have to, put some money up front to buy some points down, but let me just share why that's so critical. If you were to buy a house at $350,000 today, and you could lock in at that 2.5% rate, and assuming you put 20% down, okay, payment on a 20% down loan at $350,000 house is $1,106. Now that doesn't include the taxes and insurance, but P&I, principal and interest, $1,106 a month. There's been some speculation that why should I buy now? The market's going to crash. I don't buy into that philosophy at all. I will say it's not going to happen, not unless something just incredibly catastrophic happens in our economy. I don't see that happening. But let's play the scenario out and say that it does. And let's say that interest rates go from these crazy rates, which they will go up, we know this, to 4.5%. And instead of buying a $350,000 house, the house has crashed and now the house is only worth $300,000, and the next buyer comes and buys the house at $300,000, $50,000 off, but they're paying a 4.5% interest rate. Their payment would actually be $1,216. So, a 2% interest rate increase with a $50,000 less house, the payment's still $110 more than paying $50,000 more and locking in at today's interest rates. The rate matters, you guys. And so the reason I'm sharing that with you is the only time it really matters what you pay for a house, unless you're paying cash, is the day you buy it and the day you sell it. We live in the payment. We live in the payment. So the opportunity today is to lock in an incredibly low payment. Talked about this before. It's a great hedge against inflation. And as house prices continue to go up, because you can't build them for the same price, the new construction prices are astronomical, your house becomes a huge hedge against inflation if and when it happens down the road. So I'm just so excited about the opportunities today. You can see why there's a feeding frenzy in the market. The low rates are helping drive that. It's not the only factor, but it's certainly helpful. And my encouragement is if you're in a house that's too small, move up. It's an unprecedented time to take advantage of the marketplace and move up, lock in a low payment, and have no regrets because you can afford it. Our family's doing this ourselves. We've been in our house for 12 years, and we're moving into a larger house. I'm really excited about that. If I'm going to tell somebody to do something, I'm going to practice what I preach as well. But I do believe in it, and I'm just super excited about the opportunity the marketplace is giving our family right now. All right, that is it for today. That's my tip. Let me give you one more. If you're a seller today and you put your house on the market, and hopefully you've got a really good realtor, but one tip I want to give you is wait. Just wait for it a little bit. We've been involved in a couple of transactions where an offer, a house comes on the market and we're bringing an offer immediately or, within 12 hours and the house is already sold. It's a little bit short-sighted to jump on the very first offer, the very first two offers that come in. My tip to you as a seller is if you've got a house that's in that hot zone where there's multiple offers coming in, wait 48 to 72 hours. By waiting, you can pick a better offer many times and you can probably sell the house for above price. So that's my seller tip of the day. And if you're looking for a good negotiator, a trusted advisor, someone who can guide you through the process and help you make good decisions, that's what we're here for. I so value the opportunity to work for you. And as always, we're never too busy for your introductions if you know someone looking to buy or sell a house. That's it. I know this went a little long, but keep pressing on, everyone, and have a great day.